In this episode of the Construction Lending Podcast, we welcome Ron Haynie from the ICBA to discuss community bank construction lending and the financial regulations that can cause bankers sleepless nights. Ron, with his extensive background in banking and mortgages, offers insider expertise on the three foundational pillars of the ICBA: advocacy, education, and innovation, and how they're paving the way for a brighter future in community banking. Discover the importance of a local presence in the financial ecosystem and how community banks stand out with their relationship-based banking. Additionally, learn the impact of the regulatory environment on community banks.
They are the primary engine for small business lending, commercial lending, obviously, and consumer lending as well. But, there's sort of this little engine that makes things happen in their local communities. Well, I think, the things that keep community bankers up at night, clearly the, increasing level of regulation, every aspect of the banking business, and, the cost of that and being able to do it, it's going to be challenging for them. We've actually created modifications to those disclosures, and we applied to get approval from the CFPB to test these new disclosures.
I'd like to welcome everybody today to the Construction Lending Podcast. I'm your host, Sean Ferris with Land Gorilla. And today we are joined by a special guest, Ron Haynie with the ICBA, which is an acronym. It stands for Independent Community Bankers of America. Welcome, Ron.
Thanks, Sean. It's great to be here. I appreciate the opportunity to spend a few minutes with you.
Oh, that's great. That's great. Now, I'm really curious. We've had conversations before, and I think our audience would love to learn a little bit more about you and how you got started with the ICBA.
Sure. I've been at ICBA now almost 14 years, and I've got, I have to say this, but probably almost 50 years experience in banking and mortgage banking. I actually did time. I actually worked at Freddie Mac for 20 years, ran sales for them in the Northeast. I've worked at several banks, including the last bank I worked for, which was in Idaho. I was a community bank, and I ran the mortgage operation. And that's actually how I got to ICBA, because I was looking to relocate back to the DC area. And ICBA had an opening for somebody to run their mortgage subsidiary that we had at the time. And so I was it was like a kind of job, from heaven. Got to use all my skills and everything. I, run the mortgage operations before, and I certainly knew a lot of community banks. And so it was actually a really great fit. And so that's what I started doing. I actually was not on the advocacy side at all at that point. But then there was this little piece of legislation called Dodd-Frank that kind of happened in 2010. And all of a sudden we needed to have somebody that actually had experience in the mortgage lending world, because he had all these rules from the CFPB. And so that's how I ended up in the advocacy side, and I'm a CPA. So it's been a great trip. I've really enjoyed it. Lots of great people. The bankers are awesome, and it gives me a chance to use all the knowledge, or a lot of the knowledge I've acquired over the last half century, to help community banks.
No, I love it. I'm always curious on how, especially construction lenders. Well, how did you get into this role? It's not like you grow up thinking that, I want to be a construction lender someday, or you generally like inherit the role somehow, or somebody nominates you like, hey, we got these construction loans over here that we need managed. So I'm always curious on what that journey looks like. And coming from Freddie Mac and running the mortgage division of a bank, it seems like you have a really well-rounded background there to end up at the ICBA. Now, can you tell me a little bit about the ICBA, who your audience is, and, what does that membership base consist of?
Sure. So as mentioned earlier, the ICBA stands for the Independent Community Bankers of America. We represent community banks. We are the only national trade association that solely represents 4,500 community banks across the country. And so these are banks that are generally locally owned. Many are actually family owned, and serve primarily smaller communities, small towns, rural communities throughout America. We do have members in urban areas, large cities, et cetera. But the bulk of our membership is in small town America. So it's local lenders, very involved with their communities. Is sort of they know you because they see you at the grocery store. They they know the people in their towns, and so that helps make that bond for the unique community bank relationship banking business model. And so that's sort of the nexus of who we are and what we do. It's all about relationship banking and being involved in your community, being the ones that sponsor the sports teams and helps build a new health care center and senior centers and all those things. So that's community banks.
Now, Ron, if people wanted to learn more about community banks or find a community bank out there in their area, how would they go about doing that?
Well, there is actually a website that you can go to, and it's called banklocally.org, and that'll you just got to follow the prompts, and it'll point you to community banks in the area that you're looking at. And yeah, it's a great spot, great resource.
Oh, that's great. It's interesting because growing up, thinking about banks in general, I don't know who had told it or who explained it. I think I just inherited, kind of the classifications of a financial institution, a regional bank, and community bank. And in our last discussion, when we were, talking about doing the podcast, you brought up something just so enlightening to me that changed the way I think about, community banks and size and what they did. And, for me, it was, we hear a lot of banks talk about themselves in asset size, right? And that seems to be like, hey, I'm bigger than you because I have more assets, or I'm, better than you because I have, size being better. And you said something that was very, very special, and that was more about the behavior of the bank versus, what we have on our resume or what we have in our list of assets that accumulate. So to you, can you describe what is a community bank and, what makes a bank a community bank?
Well, like I said earlier, it's about sort of the business model, and the business model is relationship banking. And generally, community banks are your large, even though I guess if you added up all the assets, obviously not as big as the big national mega banks, but as a percentage of what they do, they pretty much fund small business in most communities in the United States. They are the primary engine for small business lending, commercial lending, obviously, and consumer lending as well. But, there's sort of this little engine that makes things happen in their local communities. And again, it's because it is that local touch. They're not, thousands of miles away, right? These are folks that are there in the community. And so they're involved in everything. So whether it's, working with the local school system in sponsoring, the sports teams and, cooking hamburgers or whatever it is that you do, I mean, there's giving back and working with the local healthcare organizations in those towns. It's a big part of who we are. So, like I said, a lot of our members are these are family-owned banks, locally owned banks, and some of them have been around for over 100 years, 150 years in some cases. And so you have a really deep tradition of being there, being, an integral part of that community. There are good times and bad. And so that's really the difference. It's not banking, of course, now there's where you have like online banking and so many things. And community banks offer all that stuff. They offer the same products and services like that the big mega banks do, but they're doing it locally. And it's that local touch where I know I can go in and sit down in front of, the branch manager who knows me. And I can talk about a credit request that I have, or a strategy I'm thinking about. I'm going to expand my business, or I need to get an ag loan. It's all those things. And it's that local touch that makes community banking different than any other part of the financial ecosystem.
Yeah, I feel that I'm fortunate enough to have experienced kind of the full spectrum, in what I do, and the area that we live in. I've got to deal with community banks, and you're right, like there's this special touch, and the branch manager, or my banker will come out and they'll talk, they'll drop what they're doing, they come out and they talk to you, and that's a pretty amazing part of the experience, and they're involved, right? Involved in the community, involved in the transaction. They care about what is happening, and then on the opposite end of that spectrum, it's like, hey, we can't do that here. You need to go to the online banking, or you do lose that. And I almost feel bad for people that don't get to experience that, because it's a huge difference, especially if you have a small business, what that translates out to, going to deal with a big, large commercial bank, you're a number. And if you're small, you probably aren't making any, they're probably not noticing you. Whereas a community bank, they get excited that you're starting a small business, and I see why. Well, what kind of work does the ICBA do to help community banks? What's the value that you're adding to those businesses?
Well, so ICBA, we have these three pillars that represent sort of what we do. One is advocacy, obviously. So representing, community banks, both on the legislative front and on the regulatory front, working with the banking regulators, working with members of Congress, working with the administration, to make sure that, community bank needs are being heard. And in that, it's not all one size fits all when it comes to banking regulation. And banking is probably one of the most highly regulated industries that we have in the United States. And so while, somebody says, well, there's a new rule or whatever, the cost and the impact and the compliance burden on the smaller organization is much greater than it is, say, on your biggest banks. So that is a key part of what we do to make sure that anything that the regulators are contemplating, or from a legislative perspective, is being contemplated, takes into account the unique business model that community banks have. So advocacy is our number one. The second one is education. And so obviously it's providing education and training for community bankers on all facets of banking. To your point, nobody wakes up in the morning and says, hey, I'm going to be a construction lender. Hey, I'm going to be a commercial lender. Oh, I'm going to go work in a bank. And I'm going to go to college for that. Generally don't. If you don't, you end up there, I know my story was, I didn't intend to ever go to work for a bank, even though my father was a banker. I didn't intend to do that. But I needed a job at one point, and it was like, they hired. So we started at the bottom and worked your way up. But education is key. We have a very robust education department, and we also have a relationship with the Barrett School of Banking. So it's very, very robust, and always, training some now, obviously some it's virtual. We also offer in-person classes and things of that nature. So education, and education also from the standpoint of when there is a new rule, like a rule from one of the regulators, how that's going to get implemented. We work with our members to help them implement that, provide their compliance people the training, or their lenders the training, or whatever that's needed. So education is the second pillar. And the third one is innovation. And innovation is really broad, but it's obviously this very exciting area, because this is how we can find ways and solutions to bring to community banks to help them implement new rules, right? Because everything probably requires technology nowadays. Again, these are, community banks are not big organizations. You don't have a lot of people. And so you're going to rely on technology to help you implement new regulations, help you with compliance, all those things, better service to customers, online banking, all those things, mobile banking, to be able to do those things and do them in a way that it's affordable for the bank to be able to do it. So we have a very robust innovation area. We just opened our innovation center in Atlanta, Georgia, and we actually run fintech accelerators. And so it's all geared around these companies that are looking to work with community banks. So we work with them to teach them community banking in a sense, and then also get them in front of the regulators and all that, so their product can get refined and be compliant, and then they can go out and market to community banks. So innovation. So those are our three pillars, and that's what we do, and you all interact with each other.
Yeah, no, that's super interesting. I think about, what's happened in the markets in my lifetime, and the ebbs and the flows and the ups and the downs, and 06, 07 financial meltdowns, and then, the pandemic and low interest rates, then high interest rates and inflation and all of these things. I just imagine that those interests and those needs kind of have an ebb and flow to it, certain things being more popular for discussion at different times. And, I'm curious, what are the kind of the big hot topics right now amongst community banks that's interesting them or concerning them? Or, hey, if I'm a bank president, what would be keeping me up at night? As I kind of think through, what's in store for us for the next few years.
Well, I think, the things that keep community bankers up at night, and clearly regulation, the increasing level of regulation, almost on every aspect of the banking business, and the cost of that and being able to do it. It's going to be challenging for them. We're in an environment right now where there's a lot more, a more aggressive push, if you will, from all of the financial regulators around regulation, and for various things. But there's definitely some new rules that are going to be implemented over the next couple of years. The 1071, the small business data collection rule, is going to have a big impact on community banks, especially when it comes to small business lending. As you know, as a small business owner, small business lending is not cookie cutter. It's not standardized by any stretch of the imagination. And community banks, one of our strengths are the fact that the ability to customize that credit request from that small business owner to better tailor that request to their needs, to their unique business. It's not like it's got to fall in this box or that box or whatever. Mortgage lending, on the other hand, has become very, very prescriptive, and it's very structured. Everything's got to fit in the box, and so that's and to some degree, that's what's actually contributed in some cases to some smaller institutions saying, we're not going to, offer the 30-year fixed rate mortgage to anybody. We'll just do loans and we'll put in our portfolio. That still gives them more flexibility. So those kinds of things are concerning to community bankers. It's, it's not that, the economy, comes and goes, right? I mean, low interest rates, you have high interest rates, whatever, and you've got institutions that have been around for over a century. You've seen all the cycles, right? And so it's not that, and it's definitely, credit quality is always in the back of your mind, but, community banks, like I said, they know their customer. And so credit issues are generally not something that you see with community banks. And so it's, those are the unique things about it, but clearly it's the regulation, the onslaught of that, compliance burden, the cost of that. And I think those are the things that you would hear mostly if you talk to a community bank CEO.
No, a lot of that makes sense. You mentioned interest rates in there. I think we've mentioned it a couple times since the start of the podcast, and them being at an all-time high. Well, I want to say all-time high, but for a lot of people that are in their first mortgage, it looks really, really high to them. I hear my parents talking about interest rates during the 80s were, you know, close to 20% headed that direction. And I'm like, wow, that I couldn't even imagine paying that something like that today. And we think about this massive demand for housing, right? We're not making a lot of traction and producing a lot more houses. Interest rates are high. It's slowing that down. So, as more people come to the market looking, there's just not a lot out there, and the affordability factor, we think about all of those things. How can community banks play an important role, when we think about housing affordability, providing financing for people buying a house? What kind of, and especially as it pertains to new construction, how can community banks help in those areas?
Well, so the thing about it is that really new construction or even construction financing is sort of a natural product for a community bank. Again, these are locally based institutions that, you go to a lot of small towns, you don't see a lot of the big national builders there. They're local builders, and those local builders, are clients of the bank, the local bank. And so, providing construction financing, builder financing is sort of just a natural product. A lot of banks will do it, will do builder financing in there through the commercial lending department. Some actually create a whole separate division for builder financing. Others handle it through their regular consumer mortgage department and treating, consumer construction loans that way. So there's a variety of ways that they do it. But again, it's a local product. And, really in construction lending, you really need to be there, right? You need to be able to go out to the site. You need to know, how is the project moving forward? Whether you're working with a builder that's building, I don't know, say 20 or 30 units a year, or you're working with that consumer who's just building their home. You need to have that local touch. So it's a natural product, and community banks do a lot of it. I like to say that community banks basically built small town America and rural America. There wasn't the big guys, that's for sure. So they have a very big role to play, and it's an important one in that. And if you think about it, again, the whole nature of the relationship banking model, the fact that if I can make a loan to you, help you build your home, right? And, for your family and everything else, and, all the things that kind of connect to that, right? So it's not just the construction loan, it's, it's the local building supplier, right? Because now they're gonna sell building supplies. It's, the carpet people, it's the plumbers, the electricians, the tradesmen in this market. I mean, all this stuff, you generate this economic activity because you made that construction by them. And so it's just a powerful product. And our bankers do a lot of it.
No, I love that concept. And I remember, back in school learning about coming out of recessions and how the housing market has to play just such a massive role in that, because it's the biggest, cog in the economic wheel. And once that starts to get moving, you get more transactions, and those transactions just trickle down, and the return is just amazing. And I could see how community banks just play a big role in that, because it, like you said, it's not just the disbursement or the release of funds from the bank to the general contractor. It's him paying the drywall person and the real estate, commission on it, and the taxes that go to the city and the permits. And, this wheel really starts to fly. And then the donations and contributions that go to the sports teams, or, the kids sports teams, all of that is just so immensely powerful. And, in a new home transaction, let alone when it relates to new construction. How do when we think about our current situation and what community banks are experiencing, with housing demand, what do you think's running through their minds in, how we got to this situation that we're in? Do community banks perceive the situation as like, hey, there's a big pent up demand for housing? Or do they think, hey, we're at an equilibrium and just rates are holding it down? What are they thinking about demand for housing within their communities?
I think and obviously every community is different, right? Some communities are growing rapidly. For example, here in Idaho, it's been incredible, the level of growth in building materials. Yet there's other places that aren't growing quite as fast. It just depends, on that particular area and what's the economic draw there for people. But I think I think everyone would acknowledge there is a shortage of housing units. You've got Gen Z, the millennials, trying to find housing. You have people my generation that aren't selling their houses as I guess rapidly as some would like to see. But and so I think you've got this natural built-in demand. I think there's also, when we had this financial crisis, there were situations where there were, housing developments that were started, developers, went bankrupt because obviously demand dropped, right through the floor. It wasn't so much rates, it was just values of properties, the housing crisis. And so, you sort of had that, I would say it was like a hangover from that. You had a situation where, some banks suffered because of high levels of properties that they couldn't sell. They had to take back the builder loans and things like that. They took that risk. And again, community banks when you're local and you're concentrated, as affairs of that community go, it also goes to you, right? You kind of, you suffer along with them. And some banks, unfortunately, didn't survive, but there were others that did. And, those projects eventually got built out and they got sold, and et cetera. But it takes time for that to happen. And then you have the regulators that, obviously in reaction to the financial crisis, really focused on safety and soundness and increasing capital levels at all banks. Community banks was historically well capitalized. Generally, you're going to find most community banks are around 10% capital, which is highest, it's higher than all the big guys. But, commercial lending and especially builder lending, construction lending, carries higher risk weights as far as capital. So what that says is you got to be very careful with those loans that you make. You have to make sure that your builder, you're working with a builder and a developer, you generally have to require more, equity into those transactions. You've got to monitor it very closely. Again, being local, you can do that. And so that's the niche that community banks have. But I think that also kind of contributed, I think, for a while to sort of a lower level of construction activity. Of course, now we're trying to catch up. And I think, again, the population's growing, so you're going to need more housing. And whether it's single family housing, whether it's multifamily housing, I think, in general, the prospects are pretty strong for construction lending, and, community banks play a big role there. So
they see a lot of opportunity in construction in the future. It sounds like, hey, it's in our DNA, and it will continue to be in our DNA moving forward. Well, what kind of work has the ICBA done to help community banks as it pertains to construction? I know a little bit about some of the work that you guys have done, but would love to hear from you. What kind of contributions have been made, or what kind of steps have been made to help community banks with construction lending?
Well, we try to make sure that any new regulations or rules that come out from regulators don't necessarily negatively impact construction lending and make it more difficult to do. So, we spend a lot of time there. One item actually that we have been working on here recently is we've actually took a project. The original, it was actually brought to us from Governor Mickey Bowman, Fed Governor Mickey Bowman, in the Federal Reserve, about trying to find a way to streamline or make it easier from a compliance perspective to do construction permanent loans because of the nature of the combined TILA-RESPA integrated disclosures that the CFPB published back in 2015 when they redid all those disclosures. And they put actually consumer construction loans under RESPA. Up until that point, they were only covered by TILA through the Lending Act. And so when they combined and put them under RESPA, they became subject to compliance with the new disclosure forms. And the new disclosure forms really don't, consumer construction transaction is sort of a hybrid product. It's part commercial loan and it's part consumer loan. And it's, you start out, you get approved for a certain dollar amount, but you start out at zero. And then you start, making draws off of that as the project, moves forward and the house gets built. And there's a, process of that. And then the consumer starts paying interest at some point on that loan once, funds are dispersed. And then eventually when the project's done, it converts to a permanent loan, or in some cases they actually do a second closing to convert that loan to a consumer mortgage loan. And so the disclosures that are in use now really don't track that transaction well. In fact, the CFPB actually admitted that they really didn't even consider construction of permanent loans when they were creating the disclosures. So what we've done, we've actually created modifications to those disclosures, and we applied to get approval from the CFPB to test these new disclosures. And it's been a lengthy process, but we have gotten approval of our template to actually test these new disclosures in various ways, through a laboratory test and eventually through a market test. And so the good news is that eventually, if the test all goes well, it should actually make it clearer to a consumer the whole process of a construction loan. In other words, the forms that they sign and they look at and the numbers they see on that form will match what's going on in that transaction. They'll know these are my construction costs, and this is what's being held back by the builder, and this is what my first draw was, and this is what I'm going to pay every month until my loan converts to a permanent loan. And then when I convert to a permanent loan, it's going to be this, and it's all right there in front of them. So that'll make it easier to explain this transaction to a consumer, which most consumers have no clue what a construction of permanent loan is. Even if you're in the banking business, a lot of times you don't understand it. And so we feel that making it easier for borrowers to understand these, the whole process, and it's documented for them better, that it might encourage more consumers to go this route, to actually, look at, instead of trying to find a home, which right now there's a short supply, maybe let's build our own home. And it might be, it might be actually even more affordable in some cases to build your own home. And so that's the goal. And so anything that helps increase production of housing, I think is positive. And again, it's sort of the nexus. It's sort of the thing that community banks do. So that's what we're doing. We've got a ways to go on the project yet, and getting underway with the testing, the lab testing. But we're pushing ahead with it. We're not gonna let a few roadblocks from CFPB get in our way.
Yeah, I'm just, my anxiety level goes up a notch, talking about the CFPB, 2015, 2016 years. And we almost need to include a trigger warning on the podcast that, hey, we're going to talk about this period of time, because I mean, it was so rough coming off of the financial crisis with all that inventory, and then it started to wean off. And then you flash forward 10 years and, demand for housing is there, but that over, the regulatory wave was starting to hit. Hey, we're going to regulate ourselves out of this problem so it doesn't happen again. CFPB is introduced, and I just remember that period of time, working with various lenders and the hesitancy to even want to participate in a construction loan or to offer the program, because I mean, I remember that period of time where it was, CFPB throws out this lawsuit and this fine and this lawsuit, and it was just, the power struggle over, you have no way to challenge it except for to take them to court and challenge their validity. And, so it was just this evil CFPB, just, fine. We don't care if you only did it one time. We think you did it thousands of times, 100 million. 200 million. And it was just such a shock to lenders that actually wanted to go out there and make a construction loan. But since they hadn't provided any guidance, during that time on how to disclose it in their new methodology, it just really delayed. I personally believe that it delayed some of the recovery, not having the economy get some legs at the time over that regulation. But then when they did, the whole purpose of the disclosure was to help provide more clarity to the transaction. And then they put this, single disclosure, dual disclosure methodology out there for people to adopt. It's like, you completely ruined the concept of making it a clear transaction to the consumer. And you just made it way more complicated in trying to do so. And it was just, now we had to deal with this wave of doc prep companies trying to figure out the calculations, and it didn't fit into the workflow, and it just burst into this overly complicated, mess. And still nobody wanted to participate in making a construction loan because of that risk and doing it wrong. People were afraid to do it wrong. And I guess this kind of plays into the, when you think about the dynamics of a community bank, it's not like you have an army of compliance people and attorneys to go interpret this, right? It was somewhat at a disadvantage for community banks to try to figure it out, right? And out of that this was born.
Yeah, and I think, the thing of it is that, again, as I said earlier, that when those disclosures were designed, they were designed for regular purchase and refinance transactions. They worked pretty well. I will say they worked pretty well. I think the thing of it was that, the Bureau really didn't understand construction loans at all. In fact, actually, I think they forgot about them until
All agreed.
And I think, to your point, a lot of folks that were doing, say, single close construction of permanent loans, just, threw up their hands and said, we got to get out of this because we don't know how to disclose this properly. And we couldn't get for a while, you couldn't get any really good guidance from the CFPB. Finally, I think it was like 2 years later after they introduced the forms, we finally were able to get the Bureau to actually provide model forms and show how you would document the transaction. It still isn't clear, but at least, okay, here's how to do it. And they acknowledged it. And I mean, and there's still lenders that will just say, look, we're just going to do a 2-close transaction because that we know it's easier to disclose it. It still isn't that clear, but it's easier to disclose it. But it's more costly to the borrower. You're talking 2 closings, 2 settlements. And so the notion to do a single close saves the borrower money, makes that transaction more affordable. It's all about how do you provide sort of the written narrative on the disclosure that shows the progress of the transaction. And that's what these forms will do in our mind anyway. And that's what we're testing for. And, I tell you what, we're really excited. I mean, it's been a long haul. I will say this though, for the Bureau, they've stuck with it. Through thick and thin, I guess. And we're the first, this is the first ever template ever approved through this the disclosure sandbox. So we were the first to do it. And I think they're learning too, as we learn. So it's kind of an interesting journey.
No, that's amazing that they've been receptive to that and caring enough to participate and allow this opportunity. When you flash forward a few years, what are you looking for, as an outcome for this? What would cause for celebration and everybody to get excited, like, hey, this was a big success and has made a big difference. What do you think that looks like?
I think that looks like being that this testing will validate our concept that providing this additional information will make it easier for consumers to understand this transaction. Thereby, you might see more. You'll have more consumers be willing to try it. And if that's the case, the Bureau then probably have to go through a rulemaking process to modify those disclosures and incorporate, these changes and modifications that are made. That's what we would like to see, is that, that becomes the new way to disclose it. Or, at a minimum, if the Bureau would even say, you can continue to use the existing disclosures the way they are, or if you want, you can use this modified version to approve it to be used. And either way would be great. And, the lenders pick and choose which one they want to do. So that would be the win. That would be when you start popping champagne corks. So.
And it's my understanding that the disclosures that are in the sandbox are much simpler to implement. So if I'm a community bank, I don't have to go spend a ton of money trying to figure out how do we utilize these disclosures? Is there, there's resources within the sandbox, there's guidance on how to do it for them as well?
Well, the sandbox, you got to remember, is sort of like an approval and a safe area to play in, right? Think of the sandbox, right? It's a safe area to play in, to test it. And so, now having said that, just anybody can't go test it. The CFPB has to approve anyone to test this, and they are very specific about how they want that test to be conducted, which is why we're going to initially go with a lab test, which is a whole different ballgame. I've learned more about testing things and all that kind of fun stuff than I've ever learned before, and I ever wanted to learn. But so, once it gets approved, then the doc prep companies, Ellie Mays, whatever, will be able to, Gorilla will be able to produce these forms and through their systems, and then they can use them. But in the sandbox itself, the term is just that this is a place where you can try things and test and experiment with sort of no harm, no foul from a compliance perspective with the CFPB. So, and the other banking regulators for that matter. That's the other part of this, is that the other banking regulators too have to say, hey, look, it's okay for this bank to test this. So, like I said, there's other issues with doing a live market test. So we're going to first pursue doing a laboratory test, and then from there, possibly expand it to a market test. We might not even need to do a market test if we get a really good response from the lab test. So,
now, if I'm a construction lender listening to this right here, and I'm getting excited and I want to, learn more, or, hey, I want to participate, how do I go about doing that?
Well, it's actually on the CFPB's website. It's under their, the trial disclosures sandbox, and you can click onto it. You'll see the application. You'll see the forms as we submitted them, and what the Bureau has approved. And then obviously they can reach out to me and just send me an email and say, hey, look, I'd like to learn more about it and possibly participate. that'd be great. If we do a market test. And what I'm doing at this point is, I'll share with them what I know at this point in the process, and then, take their information, and as things progress, we'll be in communication with them. And so, yeah.
Now, do I have to be a community bank to participate in this, or is it anybody that makes a construction loan?
It's actually would be anybody, but the way the application was filed, it was filed for community banks, but I don't think there's anything that says it has to be a community bank, and it can be any kind of lender that does construction lending. But again, most of those folks, they're willing just to want to experiment. It's probably not that great. So I don't know. We'll see.
Okay. Well, we'll include your contact information within the webinar and make sure everybody else can access that. Now, as we kind of come down and start to close out the podcast here, we have a section in it which we call rapid fire, right? And it's just a series of questions that we like to throw at you. We sent you these questions, most of these questions in advance, so you have a little leg up here. But are there any book or movie recommendations, Ron, that you've recently read or recently seen that you recommend to other people?
Yeah, golly. After so much, doing so much with, binge watching or whatever, or streaming, and whether it's Netflix or Apple TV or whatever, it's actually a movie or a series I watch. I think it's great right now on Apple TV. It's Masters of the Air. That's just incredible. I'm a big history buff, so I like anything history. So, so if you want to know what book I'm reading, it's the history of the Roman Empire. Isn't that exciting? So, yeah.
Oh my God, I can't believe you said that. It's like that viral question of wives asking their husbands, like, how often do you think about the Roman Empire? It's like, oh yeah, maybe once a day, And they're astonished.
Right. Just fascinating.
No, that's great. Now, what about a recent product that you've discovered that, until this point you didn't realize you need or that you love so much? Now, but I am fortunate enough to have found the Ember mug, and I absolutely love the Ember mug. It keeps my coffee warm at the exact same temperature. Absolutely love it. Couldn't live without it once you use it. Is there something that you have in your house or that you use almost on a daily basis that you're like, wow, this is a game changer for me?
This sounds really basic, but those cell phone chargers that you just put your phone on, that you don't have to plug it in, you just set it on top of it, right? I got one from my son, who actually works for community bank here in Boise, and it was one of their giveaways, and that thing is great. I love it. It's like I don't have to go. So you just stick it on there and it charges you the disc. So I guess that's about as exciting and neat technology as I am. Yeah, that one I think is pretty cool.
Well, I love going to the conferences. And it's like, oh, they got the charger. I'm going to go grab one off the desk. That's
it's not the fun. You got to go see your movie. It's some good stuff.
I like the travel ones, which are like a little battery pack, and then you could use it when you go. Those are those are amazing. All right, we're halfway through here. Have you ever built your own home? And if not, would you ever build your own home?
Well, the answer is I have built my own. Actually, I built a horse farm. And it was back in the late 90s, mid to late 90s. And I built actually a 30-acre horse farm at the time. My daughter was in totally club. So anybody that thinks like putting your kid in like hockey or football or anything is an expensive sport, let me tell you that horseback riding it trumps them all. And not only do you got to buy the horse, you got to buy something to move the horse around in, which is very expensive and very big. And you need a place to put the horse and feed him. So yeah, so I built a horse farm, and actually I got my financing, my first introduction to construction. The permanent loan was through a community bank in that town outside of Washington, D.C. And, it was actually a great process. But it was, it was a single closed construction loan. And so I did, and it was something. It was quite the learning experience. So, yeah.
Wow. Now that's a first here, horse farm that, would you do it again? Now here's the follow-up. Would you do it again?
Well, I don't know if I do it again. I don't know. Come on. I wouldn't be building a horse farm, but, maybe building a cabin someplace or something. Yeah, we'll probably consider that.
I like that cabin idea. I like the cabin idea.
Yeah. There's some great place out here for that too.
Now here's the last question. If you can change any piece of legislation with the snap of your fingers, what would it be?
And there's so many too. Probably, most tough.
This is a hard one.
It is. It's not so much even the legislation so much as more as how it gets interpreted by the regulator. But I think the one that I think, for me anyway, this is Ron Haynie speaking, would be in the Dodd-Frank Act, the legislation for the CFPB. Originally, and we have continued to advocate for this, that the leadership should be a council, 5 member board, so that you don't have all that authority in one person. It would also help probably reduce the political influence to some degree, especially now that the director, serves at the pleasure of the president. So if you have a change in power, you're probably going to have a change in leadership there. So you sort of get this whipsaw effect on regulation, and that's tough from the financial industry because you have to dedicate lots of resources for compliance, and you're going along one path, and then you have a change in power maybe, and then you're going in a different path, and then you change again, and somebody wipes out the rules that the previous administration did, and that's very expensive. And so the original idea was to have a commission, a 5-member board or a commission. And that would tend to maybe smooth over those changes, right? Maybe a little more balance. And so that would probably be the one thing I think I would change at the snap of my fingers if I could do it.
Yeah, no, that's I've never thought of that one in that sense, but removing kind of the ideology or political influence, the weaponization possibilities. And for those that don't know, the CFPB has this near unchecked power. I mean, how would you describe that?
It's pretty powerful.
The president can remove the director, right, of the CFPB.
Mm-hmm.
Is my understanding.
Now they can, before it had to be for cause.
Yeah, for cause, and that was when that position was notated. Hey, you're more powerful than the president of the United States, right? That was a pretty big role in my book, and still is today to some extent, right?
It's a very very powerful organization. It reaches into a lot of areas, and again, it's just about, especially from the financial perspective, financial services perspective, and banking. Banking is one of the things you want is consistency, right? Dependability, consistency, and nobody wants wild swings in the banking business, right? Because that always sort of bodes bad things, right? Think about the financial crisis. All of a sudden, people are, fogging a mirror and getting mortgage loans, and, it's just going crazy. And then what happens? Everything blows up. You can just kind of go back to all the big financial panics and meltdowns in history. And, so what you want something good, steady, and even, something that's predictable. And even when you have that kind of whipsaw, depending on whatever the political winds are at the time, it gets very difficult and expensive. So that would probably be it. I think that would be the one thing that I would have liked to have seen.
Yeah, no, I love that, Ron. And this has just been an absolute pleasure learning about the ICBA, your journey. what's keeping community bankers up at night, the disclosures. Man, we could just make a whole podcast just about that. Yeah, but this has been truly a pleasure having you on the podcast today. Thank you so much for being here. If people wanted to get a hold of you, what's the best way for them to get a hold of you? Email, LinkedIn?
Yep, email. I'm also on LinkedIn as well. Then certainly email Ron Haynie, Haynie at ICBA.org.
All right, fantastic. Well, we'll host that with the podcast here. And thank you very much for coming on board and listening to the Construction Lending Podcast.
Thank you, Sean. Really appreciate the opportunity and look forward to working with you guys too.
This podcast is intended for educational and informational purposes only and does not replace independent professional judgment. Land Gorilla Inc. makes no representations, warranties, or promises for and disclaims any express or implied warranties related to content. Before acting on any information, you should consider the appropriateness of the information as it pertains to your unique business needs.